Morning, Steve Free in Chicago with the morning grain comments. Well, grains are lower overnight. Outside markets, stocks are higher, dollars lower, crude's higher, and most commodities are actually higher. Might be a little less talk about inflation and interest rates over the next couple of days, which is bringing in some bottom picking, especially in the stock market. As far as the grains are concerned, I think that there's a U.S. Midwest weather pattern for a little bit for everybody. I think over the next rest of the month, there'll be limited rainfall for much of the Midwest. Today it's hot. Here in Chicago, we're testing the high temperatures of 1988. But then starting tomorrow, we'll have a cool off. And the rest of the month, the Midwest will see highs in temperatures probably in the mid 80s. Now, until June 26th, the South Delta is going to be hot and dry. And that could stretch the soybean crop there, which is the crop that we harvest first and load vessels first for new crop. Europe's going to get a few showers. Black Sea is still warm and dry, and South America is warm and dry. Canada and U.S. Northern Plains is weather's improving. We should have a good harvest pressure for hard red winter wheat, and less concern about maybe a lower spring wheat crop, although acres might be down. The war in Ukraine continues. There was some shelling at Odessa ports, and seems like the attack on eastern Ukraine is becoming more intense. The other things is demand. We're still waiting to see for some big sale weeks for beans and corn. We also are not seeing any wheat export sales out of the normal buyers. Seems like they are trying to delay purchases, hoping for lower prices, and that they need coverage. Most of them are short, just like U.S. bakers. China seeing a little bit more COVID cases in the south, and there's always concern about them taking less commodity demand, or at least sourcing some of their, especially energy needs, out of Russia, which is something that is probably weighing on commodity demand. The big thing is inflation, and whether or not we've seen prices high enough for gas and food that might slow demand. The other thing is wages. I don't think there's anything the Fed can do about higher wages and that part of inflation. As always, these are my thoughts and not those of ADM Investor Services. Have a safe and profitable trading day. And remember, always treat people like you yourself would like to be treated.